Morning, everyone. It's a little after 8:30, and I waited this morning to do this pre-opening video until the economic numbers came out. So this is video number 355, and it's for Thursday, July the 30th, and here we go. Okay, so we had the second quarter first look at GDP, and the number was pretty stunning, although not as bad as expected. Second quarter GDP declined by 32.9%. I warn you that this is a changeable number and will be revised at least twice more. So, excuse me, down 32.9. Estimates were for down 34 to 35, so slightly better. The big decline actually was in consumption, down 34.1%, and that broke out to purchases of goods only down 11%, but purchases of services down 43%. So clearly, the COVID-19 issue has kept the service business down dramatically. Business investment was down 49%, and that too is kind of a stunning number. So it's Thursday, so we have initial and continuing claims, and initial claims for unemployment were 1,434,000, which is up from last week's 1,416,000. So, that's a bit of a disappointment. Also, continuing claims rose to 17,180,000, which versus last week, initial was 16,197,000, and that in fact was a revised down number all the way down to 15,000,001. So we have a jump of 17,180 versus a revised decline down to 15,1. Okay, so the result of all this is that the bonds, the treasuries, are currently challenging all-time low closes, all except for the 30-year, which has gotten substantially higher and seems to be holding that. Asia and Europe were mixed to lower. Asia was more mixed. Europe was more lower. Dow futures are pointing to an opening of down about 225, NASDAQ down about 75, S&P's down about 26. On the earnings front, yesterday and last night, we had P&G, which closed at 130 3/4, up $2.50 or 2%. Qualcomm was the huge winner. It was a major beat and gave good guidance. The stock is trading 104.5, up 11.47 or over 12%. PayPal 190.5, up 590, 3.2%, and UPS 137 this morning, up 13.32 or 10.8. We have Newmont spreads on, and Newmont has earnings supposedly this morning before the open, but they have not posted. And of course, the big three have earnings after the close today. That's Apple, Amazon, and Alphabet. But those are not the only ones. We have Expedia, we have Deckers, EA, which is Electronic Associates, Ford. So there are plenty of numbers coming, and obviously some very important ones. I want to comment again on the Kodak. This is very disturbing to me. Frankly, I think that they should halt the stock and do an investigation into how the news got out on Monday with the massive volume. This is the reason that small investors believe that they shouldn't be in the market, because it's rigged. And clearly having a leak, as what obviously occurred in Kodak, is really an appearance issue as well as a practical issue. I mean, how would you feel if you sold it because you didn't know that that news was coming, and the stock moved as it did from under $10 to trade 60 yesterday? So, I think that's a problem. I'm sure if I would have owned even one call in Kodak bought on Monday, I would have already heard from the SEC, yet nobody is saying anything. As I mentioned in last night's daily note, where the hell is Stockwatch? That's what they're supposed to be doing. They're supposed to be finding these situations, and this one was glaring. It doesn't take much to find it. This one was just a glaring example of something that should not have happened the way it did. Okay, everyone. So also, I just wanted to show you this chart. This is the silver, and I've mentioned it before. We broke out here at $20 and ran all the way up to 26 and came all the way back down here to 23, just under 23 and a half, which is a 50% pullback of that move to the upside. We rallied the next day, and today we are down a little. It looks like we may be testing this little area around 22 and 3/4 for the silver. And this is the way that commodities tend to trade. If this holds, I'm going to guess we will put in another leg higher. The gold looks approximately the same, but not exactly. By the way, the oil is down. It was up about 35 cents last night. It's down 67 cents today. Okay, so the gold chart looks a little different because it had these rallies and pullbacks and rallies and consolidations, and a consolidation here after it broke out above 1800 that lasted almost 2 weeks before going on this run from 1806 all the way up to 1974. It is a little bit more confined. I'd love to see it back around 19 and a quarter, 1925, before putting on another leg higher. As I've been discussing for weeks now, the main issue here is the dollar. And while it's up about 10 cents today, that is really no rally. We have I said yesterday I thought it looked like we might be trying to stabilize in here. It still looks like that, but I still don't see it getting through 95 or 96 on the upside. And so, this continues to be a problem. Also, one last item, at 10:30 this morning, and I mention this because we're in the UNG, which is the ETF for nat gas. The nat gas inventories come out at around 10:30, so we'll see how the nat gas acts when that happens. Okay, everyone, have a good morning. I'll be back later.